Bond yields are kind of bottoming here. Helene Meisler, who does all the charts, he put out a great chart of 10-year yields showing like a head and shoulders bottom.
Because you nailed Kevin Hassett as the next Fed chair, and that's pretty much a done deal, right?
A lot of people are looking at this guy as like Caligula's horse, like the most dovish guy of all time, like he's going to lower rates to zero.
Silver, to me, you're either long, very long, or flat.
I'm like Gartman, man. I'm flat and scared.
JP Morgan announces these leveraged Bitcoin linked structured notes.
Burry is a terrible portfolio manager.
The TG Macro first conference in Nashville in February of 2026 is shaping up to be a very serious investor event. I am totally blessed to be able to say that we've got John Johnston, Doomberg, Dillian, Grant Williams, Brent Johnston, Harris Kupperman, and myself as speakers. We're going to talk about the opportunity set for 2026. Maggie Lake is going to host the event for us, and we are on pace to sell the conference out. So run, don't walk to sign up for that. What's happening, good people? We are here to record Macro Dirt Podcast number 75 with my man, JD. How you doing today, JD?
What is up?
I'm pretty proud of 75 Macro Dirtcasts.
We've been doing this for a long time.
Yeah, we're going to be pushing 100 soon. We'll finally have a 3-figure number in the Macro Dirt. I'm really proud of us. We are on pace.
But before we get to 100, we're going to have the Aaron Judge podcast.
Oh, yes, without a doubt. Good call.
99.
Yeah, the Judge podcast. There might be a few more athletes on the way up to 100, but we are kind of working that out. What I think is cool is that this year we are on pace to do 52 Macro Dirt podcasts. I'm proud of that.
Well, I got to tell you, and maybe we should talk about this offline, but I might have jury duty in 2 weeks.
Oh, my God.
Yeah. So I'm supposed to show up for jury duty on Monday the 15th. And if I get picked, then you're going to have to get a guest.
We'll figure it out. The Macro Dirt podcast has got to stay consistent because this is something that traders appreciate, and we're traders, and that's why we're consistent putting it out. So let's get into the markets. I think we can start with one last victory lap before going on, because you nailed Kevin Hassett as the next Fed chair, and that's pretty much a done deal, right?
It seems to be a done deal. It does.
It's getting a lot of airtime, whether it leaked out or not. It looks like it's happening. The odds have spiked on the betting sites and things like that. So it looks like that's the deal. What do you think it means?
Let me just talk about Kevin Hassett for a second. So a lot of people are looking at this guy as like Caligula's horse, like the most dovish guy of all time, like he's going to lower rates to zero. I think it's more nuanced than that. I mean, Hassett is a hack. Like, he's definitely a Trump hack. He basically spouts the party line. He's good on TV. He's good in front of a camera. He's very well spoken. But he has also said a lot of things about how the Fed has to be independent. So on one hand, he kind of kisses Trump's ass, but on the other hand, he says a lot of things about Fed independence. So I'm not really sure we have a good handle on who Kevin Hassett really is, right? Like, a lot of people think he's going to cut rates to 0 or 1%. I'm not necessarily sure, He might get in the seat and not be really any less hawkish than Powell. We just don't know, Yeah. And the other thing I'll point out is that bond yields are kind of bottoming here. They're bottoming. Yeah, okay. I think they're bottoming. Like, Helene Meisler, who does all the charts, she put out a great chart of 10-year yields showing like a head and shoulders bottom on 10-year yields. Like, I don't know, like, the price action in the bond market has changed. And I'm kind of wondering if Hassett is like a sell the news event for bonds. Like, bonds have been rallying all year, basically on anticipation of this. And we name him Fed chair and the bond market sells off.
True, man. It is set up for that kind of a trade. The only contribution I have to that is that because the world and Trump is so political, I would imagine that the independent Fed talk is a smokescreen and that he's scared shit of President Donald John Trump. So that's just my own personal opinion, and I could be wrong, but I would kind of lean that way. And I look at the 10-year chart like you. There is an inverse head and shoulders staring us in the face. So let's respect that. I don't have any axe to grind with rates, man. I'm just going with the flow. I feel like they're going to go lower, but I do agree with you that this is a typical Costanza setup. Peak dovishness ideas on the hiring of Hassett, just like where you just went through peak New York City fear is coming to an end when we elected Mamdani. I wouldn't be shocked if that's the case either. So while we're talking about the Fed, how about, JD? I'd love to hear your opinion on this. QT ends on December 1st, and Jerome Powell shows up, keeps the party going, and does the second largest repo injection since the pandemic COVID shutdown. What is up with that?
Dude, I don't know what's up with that. I didn't see that.
Biggest repo since COVID operations, right in the wake of ending QT. So it looked like somebody was specifically injecting liquidity at a very timely time.
I mean, the one thing to keep in mind about QT is that if my math is correct, the Fed was really only selling about 4 billion bonds a day. I did the math several years ago when they started QT, and over the course of a year, it adds up to $1 trillion.
Yeah,
but they still have like 5 or 6 trillion on the balance sheet, so it's not like we were making a big dent in the Fed's balance sheet. And 4 billion a day in the bond market. I think a lot of people think, oh, the Fed's ending QT, so rates going to go lower. But 4 billion a day is nothing.
Right.
That's like lifting the offer on bond futures.
Yep. Totally fair. I am kind of impressed that they were able, the balance sheet peaked at around 9 trill dog right around the beginning of 2022. And at least we've got it down to 6.5 trill at last sale. So they are making progress, but it is a slow bleed, and it doesn't seem like something that is a headwind for the market, certainly in any way. We got to talk about metals as long as we're on this vein. Silver, to me, you're either long, very long, or flat, right? You can't fade it above 55.
I'm like Gartman, man. I'm flat and scared.
Yeah.
You remember when Gartman used to say that? Like, I'm flat and scared.
Yeah. I like that. That's a real sentiment. That's a real sentiment for sure from a trading perspective. And one of the times that it's always nice to have powder sitting in front of you. So when you see that blow up happen, you could be like, oh, this is what's going to happen now. Let's put that on. That's what I like about that kind of setup. But where do you think silver gets to, JD? Finger in the wind. What are we talking about?
I mean, it's got a date with $100 an ounce.
It's got it, right?
It's going to happen. And I mean, silver went from like 50 to 58 on a rope.
Yep.
Like just on an absolute rope. And then there's all these conspiracy theories around this CME, like Globex shutting down. And like people think it was to stop the silver market and stuff like that. Like, I think that's a bunch of nonsense, but it's pretty interesting.
Can I tell you that I can't get my $600 Bluetooth headphones to connect to my $3,000 iPro 17 on a regular basis. And people think that the markets, which are billions of dollars transacting per second, have got to work perfectly 24/7, or it's got to be a conspiracy. Like, I don't have functioning email. No, my Outlook sucks. You know what I mean? And people are like, it's a conspiracy that the exchanges aren't working. It's like they're trying to process 1 billion transactions per nanosecond. I don't even know how that happens. So anyway, I obviously I can't buy into the idea that there's anything conspiratorial behind that. I've never bought into the JP Morgan naked short and that these guys have been keeping it down for, come on, man. Nobody can keep a secret for that long. So it sets up for another bullish setup. But what's wild to me is that silver's breaking out to a new high. Gold is doing its thing, retaining value at the highs, which is really key to me. And Bitcoin just has this wild kerfuffle. We have 2 sigma, we have the spill down to 80K. It bounces to 92K by the time you can figure out what's going on. And then you come in Monday morning and there's a 2 sigma slide. Strategy is trading at $150 on the lows. He announces $1.5 billion dollar reserve. His butt cheeks have got to be puckering now because he's got $57 billion worth of Bitcoin and MicroStrategy is at 52 billion market cap. And all of a sudden the market comes in and saves them the next day.
Yeah, I mean, save for like this
Temporary.
week.
Yeah, maybe it's a put off. But
by the way, I want to back up for a second because just kind of like for compliance reasons, I don't want people to misunderstand my position on silver. I said I was flat. I have a core position, including a lot of physical that I have been holding for a long time. I'm talking about like trading positions.
Yeah.
So
that's always what we're referring to. Like as a full disclosure, JD and I obviously have had precious metals physical, on our person for years now. So that's kind of a given. And I'm not in the silver trade either right now. I am in the gold trade and it's going great. But I agree with you that we should make a delineation between when we have a trading position on and when we don't, because we are inherently long the underlying physical.
Yeah.
But what was wild was last week, JP Morgan announces these leveraged Bitcoin linked structured notes, 1.5 times leverage, 30% downside protection, expire in December. So they just kind of created instant demand. Vanguard allows crypto ETFs on the platform. Bank of America recommends a 4% allocation to your portfolio, right? The 60-40 portfolio has been blown to bits. Now we need 20% gold, according to Morgan Stanley. We need 4% Bitcoin, according to B of A. And Goldman buys Innovator for $2 billion.
I think the Vanguard thing is hilarious. I think it's hilarious.
Well, keeping them off crypto for a while was hilarious. But.
So go back 5 years ago when Vanguard was faced with a decision as to whether to include the crypto ETFs.
Yeah.
Like they have principles. Like their principles are stupid, but they have principles. Like this is the firm of Jack Bogle, right?
Yeah.
And they're like, we don't want crypto on our platform. If you're going to have principles, then stick to your principles.
And have them.
Right. So what they did was 5 years later, they said, we'll let crypto ETFs on our platform, but it's too late. They already lost all the market share to all the other brokerages. Yeah. So now they just look like idiots.
They do. I agree with you. If you're going to have the principles in the markets, just have them and just leave them there. And everybody says, oh, Vanguard, if you join them, you can't buy crypto.
Yep.
That's how old school they are. It's going to wind up saving people a fortune in the end. And the fact that they just allowed them to trade ETFs makes me bearish.
Yeah.
It's the same thing. It's kind of the same deterioration of the principles of hodling forever. And this is a magic carpet ride to wealth. Vanguard's like, all these guys are making money on this thing and we want in. That's it. That's all it is. That's the whole story right there. It's like
carpet ride.
Yeah. It's no longer a magic carpet ride. The guy's like the OG is like, you know what? Have 9 yards of this thing. What am I going to do with this if the lights go out? And everybody was like, what? And it's amazing. It's amazing. And the perma bulls, like I've said before, the perma bulls are saying, what would you do if you had $9 billion of Bitcoin? And my argument is that I was never arguing holding it forever in the first place. So that's where we are on the crypto conversation. I'm glad JD had a good laugh out of that. Stocks, JD, 68.50 with they're not going down, man. They're not going down.
Man, I don't know what to say. We had a 6% pullback, which is a decent sized pullback. That's a decent sized pullback.
Yep.
And God, the price action, I forget what day it was. Like the 3 days after the lows, they were just gobbling them up. I was like, oh God, I'm wrong. This is a problem.
You knew it too. You knew it too. And that was my get out of jail free card. Was we traded down below the 100-day in the S&P. We traded to the next day. We traded to a low of 65 and a quarter, and then came roaring back and closed above the 100-day moving average. And that's when I was like, I think we're good here. I think that was it. Like that was the low, and here we come. And then 2 days later, it leaps over the 50-day moving average at 67.70. Here we are at 68.50. Right. So what was interesting to me in December, JD, was that behind gold miners, which have been the leadership of the year, so it makes sense for me that they had a good month with gold and silver rallying. But the next three best performing sectors: solar, airlines, and I think it was like maybe aerospace and defense or something like that. But leadership definitely changed. Oh, healthcare. Yeah, that's what it was. And biotech was in the mix too. So my point is, if you're bearish, you got to be deeply disappointed that November was a 5% recovery to unchanged with different leadership. So there's a rotation under the hood there, and the S&P still came out positive. That is a big problem for bears, in my opinion.
Well, the other thing that happened was during that 6% pullback, you had this narrative that NVIDIA chips were using too much energy and they were losing market share, and Google ripped like 10% a month for like 4 months in a row. And the story was that Google is figuring out AI and OpenAI is dead and NVIDIA is dead. And that's where we were on the lows of that 6% move. And now the narrative has totally changed. NVIDIA is ripping again. Like
NVIDIA is talk about being flat and scared. That thing is a random number generator. You know what I mean? Like, it's so headline susceptible here at the highs. And in my opinion, that's usually added volatility that you see at the highs, right? At the peak of a lot of stocks, you notice that they gap higher, gap lower, gap higher, gap lower. And that is just weak shorts and weak longs getting cleared out into stronger hands. And then the market finally decides what the right way is. But I still want to bet lower in NVIDIA. The thing just will not break down. Like, I still feel like we're set up for a situation where tech can pull back hard and commodities can explode. You see natural gas, JD?
Yeah.
Natural gas is $5 bid now. And, I necessarily have an opinion on that thing, but I am watching where it's going. And we've got that big cupping bottom.
A lot of people have been recommending natural gas to me for a while.
Yeah.
And I looked at the chart and I'm like, I just cannot get my head around this. Like I couldn't pull the trigger on it,
Yeah, it's not that transparent. It's dangerous as could be. It's like silver on crack. And it's not a safe trading vehicle. It's not safe. It's better for you to go in and buy some of the producers. Buy Duke. Yeah. You got a better chance of not getting your head blown off if you're wrong. So that stuff is all percolating to me with gold and silver at the highs. And I'm telling you, we're going to smack ourselves in the forehead if WTI bottoms here the way I feel like it is and trades up to 75 in a couple of days, because that is going to send the BCOM for a ride higher. It's probably going to adjust the markets a little bit as well, but under the hood, energy stocks are fine.
Oil, it feels like it's bottoming. It does. And this is not an analytical or intellectual thing to say. It just feels like it's bottoming. It's a very long process. This has taken a year or more, but it feels like we're getting down to tag ends here. So
it's a trading conversation. It's a trader's conversation is what it is. It's a conversation that happens on the escalator of the Merc when you're talking to a guy in another trading jacket with a badge on, right? It's like, man, this is what I feel like. And the reason we feel like that is because we saw a double bottom in WTI crude oil back in April and May, and our brain continues to register no new low, no new low. And here we are in December, no new low, right? So somehow the price action stopped sliding. So that's what we're noticing, and that's the trader's gut that we're talking about there. I think we covered a lot about the markets, JD. We covered rates. You want to talk about FX at all? Do you have a dollar axe right now?
Our friend Brent Donnelly has dollar axe. He's short.
Yeah, saw that.
And I don't have a strong opinion, but when he talks, I listen.
Damn straight.
So,
if you're looking at it as a technician, you've got a double top around 100.5 in the dollar index that coincides with the test of 200-day moving average resistance. And then you've got this steep pullback to just today, where the dollar index is breaking the 50-day to the downside below 99. So this is a good momentum day for Brent. I hope he's right. Like I said, I don't have an axe to grind, but I bet you that it probably stops metals from trading the bid side for a while if the dollar backs off. So we'll see how that goes. All right, JD, I think we covered everything in the markets. Have you signed up for Michael Burry's blog yet?
How much does it cost? I don't even know.
I don't know either, but I think that he should be signing up for our newsletter if he's smart. I mean, we're better at he's got more money, but we're better at markets than him.
Dude, here's what you were going to read something out of my newsletter.
Let's have it. Let's read it right now.
Yeah.
Here's JD, and I quote, "Also, I'm kind of wondering why Burry is charging for his newsletter in the first place. Isn't the guy super rich? I actually have no idea what he's worth, but I imagine $100,000 of Substack revenue is probably not moving the needle for him. Now, there is one very good reason to put up a paywall. It keeps all the haters out. Still, Burry with a newsletter does not compute. And can you imagine if he actually needed the money? Also, if it's influence he wants, then why not make it free? You reach 1 million people instead of 100,000 people. Beautifully written. Riff on it.
Yeah. Burry is a terrible portfolio manager. And I'm not saying that I'm not saying he's dumb. I'm not saying he's incompetent. What I'm saying is that ideas are different than managing a portfolio. So in the history of Burry managing his portfolio, he would be like, I'm all in on NVIDIA puts, like the whole portfolio in NVIDIA puts. I'm like, dude, that is not a portfolio. Like that is like, in order to build a portfolio, you need things with low correlation to each other or negative correlation to each other. You want steady growth. He's a terrible portfolio manager. So basically, who do you want in your corner? Do you want somebody who's going to like generate alpha over time? Or do you want somebody who's going to make like these big, gigantic bets? See, here's the thing. He just signed up 100,000 people or whatever. He's going to make one of these big bets and it's going to go sideways and he's going to end up with 50,000 subscribers, right off the bat.
I couldn't agree more, man. My only view, and I don't think anything of him as a person. I'm sure he is a lovely fellow, and I don't want to sound too insulting. But when you look at what he does, is that he seems to be a guy that is a consumer of doom porn in the markets. And he will literally just decide one day, like, in what I would look at as a raging bull market with no cracks in it, he stands up and says, I'm limit short. This thing's going to zero. And you're like, what? What are you watching? What are you looking at? Like, give me something. And so that's what I really don't like about him. So
having said that, let's say you had $100 million and you were going to invest in 10 hedge funds. You would want to give him $10 million as a hedge on the rest of your portfolio.
Yeah.
It's almost like holding a tail risk fund.
It's like giving money to Cuppy.
Yeah.
Totally, man. Totally agree that there's a home for that if you want it. So I think we carved him up pretty good. He's an innocent guy. He's got a BA from UCLA. He's got a doctorate from Vanderbilt. He did his residency at Stanford, started Scion Asset Management, called the called the mortgage crisis before it blew up. And what movie is he featured in? The Big Short, right?
Big Short, yeah.
Yeah, with Bateman. What's pretty cool is that they show Bateman reading the book.
Christian Bale.
Bale reading the book that he named Scion Asset Management after, which I thought was a cool little twist in that movie. What else do we have to discuss, JD? Did we cover everything for today?
Yeah, I think so.
I think we did. We keeping it short and sweet. We're going to wrap up Macro Dirt 75. We're going to stay on our path until JD figures out what jury duty has in store for him.
Yep.
But we're going to figure it out from there, and the Macro Dirt must go on. So we're going to sign off, and we're going to see you next week on Macro Dirt 76, and I think we're going to have a special guest with us. So hasta la pasta, everybody. See you in a week.
Hasta la pasta. See ya.
Thank you for listening to the Macro Dirt podcast. Like, subscribe, make money.